Hello, ladies and gentlemen. My name is Greg Michalowski, and I'm going to take a further look at the euro versus US dollar by taking a look at a longer term perspective to see what the charts are telling us from that perspective as well. But first, I'm going to start off with the hourly chart, and this should become familiar or should be familiar to you if you've seen my videos over the last few days on the euro versus US dollar. If not, go to our YouTube channel and click on those videos. Anyway, what we have now after today's high, after yesterday's high, after Tuesday's high, is we have a pretty good ceiling here being developed against the 50% retracement of the move down from the, I'm going to go back in time here, the June 27th high, just right here, so you can see that. Move forward to the low that we saw last week, and the 50% midpoint of that range comes in at 102.829. Okay, so we saw the high price today extend above the high price from yesterday, which extended above the high price from Tuesday, but only by a few pips on each time, and that's a problem, and that's why we saw the market start to move down to the downside. We also heard from ECB's Lagarde, who said that yes, we may have done 50 basis points today, but it doesn't necessarily mean that we're going to change the terminal or the rate forecast going forward. And so that started to lead to the move back to the downside, back below this swing area here that we talked about earlier, below the 102.198 level. And we moved all the way down, broke below the 100-hour moving average, and then rebounded on the and failed on that break of the 100-hour moving average. You can see over the last 5 or so hours, the price has tried to move back below that 100-hour moving average. Can't move below that level. The level currently comes in at 101.796. Now, when you trade, you ask your question, what if? And you also have to ask, what is the risk? So the what if is, what if the 100-hour moving average holds? Well, we would go and look at this swing area again, swing highs, get above that level, and we go and look at the 50% retracement. And so that is the what if scenario on the upside for this currency pair. And then we also have to look at what if the price moves below the 100-hour moving average. And in that case, the bias turns more into the negative. We've tried to go below the level here. We couldn't close below it. We tried to go below it here. We couldn't close below it. We tried to go below it here. We couldn't go below it. So if the price were to move below that level and see a close on an hourly basis below that level, I would expect that we'd see further downside momentum for this currency pair, wouldn't you? Okay, so that's what we do as traders, to try to understand the what ifs and think about the future going forward. Now, I said I would look at the daily chart, and I'm going to do that now. And so here's a daily chart of where we are and this 50% retracement that I've been talking about. And if we look at that level, I'm going to move this out a little bit here. If we look at the 50% retracement, it's of this move to the downside. Okay, that move encompasses the swing high going back to the end of June 27th, to the low. But as you can see, the euro's been on a tear to the downside. Well, you can go back to this point right here in May of 21, and the price was up at 1.22657. So we've come down over 22% from the high to the low when we broke below the parity level. It's not that hard to figure out, I guess, more or less. And we moved down to the 99.51 level. And so what I'm pointing at is that this move and this corrective move is only of this little tiny move right here. The move down from the 106 area down to the low right here. It seems like a long way off the hourly chart, but in perspective of this whole move, it's really not that much. Now, if we were to go over here and we'd connect a low trend line through here, connect our lows, you can see that the low price this or last week got within shouting distance of this lower trend line. Okay, that's somewhat significant, somewhat indicative of maybe support buyers looking to buy against that level, to buy against a low level with risk defined and risk limited against the level. And so, we've seen this rally, this corrective move up to the upside. Now, the question comes, if the hourly 100-hour moving average can hold and we can start to move above the 50% retracement, where do we go? And from that perspective, we have to go back to these lows through here. And if I were to look back even further by shortening up this chart. Actually, I'm going to even go to a weekly chart. That's easier to see. So if I change this to the weekly chart and look back in time, these lows through here corresponded with these lows through here. And in fact, the 103.39 to 103.657 is a pretty key floor area going back in time, right? And so if we get above the 50% retracement here, we're going to be looking toward the 103.39 to 103.657 as the next key target on the top side. And that's what we have to look forward to if the 100-hour moving average should hold. If we get above the 50% retracement, it opens the door for further upside momentum, and that would take the price up toward the 103.39, 103.65 level. And I don't think it's that hard to reach to think that we may go back up to that level. The euro has been hit very hard. The dollar has been very strong. There's talk of slowing growth from the likes of Microsoft, Apple, this, that, and the other as a result of the impact of the higher dollar on earnings abroad where they have a lot of business. So that may start to shift the tide a little bit toward selling the dollar as opposed to buying the dollar, which is what currency movements are supposed to do. They're supposed to self-correct the strong and the weak and make the strong weaker and the weak stronger at certain times. And so the question becomes, is it time? And we don't really know, but we do know the technical levels. We do know that if the price is going to go higher, it has to stay above the 100-hour moving average. It may be that we go down and test the 200-hour moving average and then break to the upside. But these are the types of things that traders have to focus on. Traders have to understand. Traders have to pick out the storyline and see if the price action matches that storyline. And if it doesn't, you get out, but you still have the same old story to tell with the same old end to the story if it plays out in what you think may or may not happen. So there you have it. A little more detail, a little more story, a little more understanding of how to trade and what to look for. I hope you like this video. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.